I'm so happy to be here with you today. I am going to talk about today is getting payroll. So getting your team together, right? We talked about teams and delegation and your time is money a lot this week, but today we're going to talk about employees specifically and payroll specifically, because a lot of people have a lot of questions on what that actually means, right? What does it mean when you add employees? So a lot of times I hear people refer to employees, but they're actually contractors. And so let's first talk about the difference between the two. An employee is somebody that you basically tell when to work, how to work, and what to work on, right? So you're giving them all the pieces and the tools for their job. They are also somebody who does not have a business entity, so they don't have an LLC, and they're doing a job that they wouldn't typically be able to do for somebody else. So for instance, I'm a contractor for many of our clients, or for all of our clients rather. We are contractors. They hire us, we do the work, but they don't tell us when to do it. They don't tell us how to do it. They don't tell us how long it takes to do it. They are not providing the software or computers or office supplies. They're not providing any of that kind of stuff for us, right? So we are a contractor because they are not providing anything like that. Additionally, I can do this job, what we do at Sidekick Accounting and your accounting sidekick, for many different people, right? We have about over 60 clients right now, bookkeeping wise, again, I take accounting services, which is my main business. We have over 60 monthly clients that we do bookkeeping for. And so we have multiple people that we do that same thing for. Let's flip that script though. So say I was working in a job where I would go and work in their accounting department, and it wasn't just me. I reported to a boss, or I had people reporting to me, which is often how accounting departments are set up, right? There's multiple people, it's not just one person. And I had to go into that job and, into that office, and I had to do, they told me I had to pay the bills and run the payroll and, sort through receipts or file papers away. And so they gave me that, they gave me the tools, they gave me the computer. And at that point in that I was doing, I can't do that for multiple people if I'm working full time or even sometimes part time at that job, right? It's just, they're telling me where to be. Similarly, and this is where I come up a lot, is in the retail or restaurant space. If I were to be a server or, a clerk, a store clerk, or whatever they call sales associate, I think is what they often call it as well. You're there in a place and you're being told what to do, how to do it. You're given the tools to be able to do it, maybe a uniform, shirt, and, the office supplies, you're giving, the food that you're serving, whatever it might be, right? You're getting the stuff that you need in order to perform your job from that company. And so typically servers and retail workers would be considered employees because of that. But I also want to talk to you about where the advantages are between having a contractor versus an employee, especially in that space, because I know a lot of people choose to consider their contractor to be a contractor versus an employee because they feel like it's saving them money. And it's an incentive to, their employee because they may be getting paid a little bit more as a result. So here are some things to consider when it comes to putting together your team and determining contractors versus employees. Employees you have a little bit more control over, but what that means is that if you need them to do something outside of their job, you can request that from them because they're an employee, right? Oftentimes when we sign employee contracts, it gives us a list of all the things that we're supposed to do. And at the bottom, it usually says, and anything else as needed, right? That's like their little catch-all phrase is, and anything else as needed, because then your employer is able to give you more of a direction or ask you to do other things outside of maybe your normal scope of work. So that's one benefit to you as an employer, especially if it's smaller, because that employee might need to do multiple things at the same time or cover for somebody or something like that, right? So having that ability to, and that flexibility as an owner is really important. You can only do that when you have an employee. The other thing too is that there's benefit to your employee. You pay them as an employee versus as a contractor. One thing is when they are paid as a contractor and they get a 1099 at the end of the year, they have to file basically a business tax return, right? So they file a Schedule C on their personal return because to the IRS, they're a business owner if they are getting a 1099 at the end of the year. Many people don't realize that, but that is the case. So you filing your business return, at the end of the year, and you have your Schedule C that you're filing your taxes on. Most businesses that are single member LLCs or sole props are filing with a Schedule C at the end of the year, but your employee has to do that as well. But the difference is that you as a business owner, because you're paying a lot of other expenses as a business owner, whether it's software or overhead or office supplies or whatever it might be, you get to deduct all of those expenses throughout the year as well. So on your taxes, you have your income that came in, but then you have all of your listed expenses that you get to take out. So then you're paying that taxes on the net income number. Well, your employee doesn't have those expenses because you were providing for all of those kind of things, right? So at the end of the year, when your employee files their taxes, they have to still file as like basically a business, but they don't have any taxes they get to take out. And so they pay a self-employment tax of 15% additional on that amount, on top of whatever their income tax amount might be, just from the income that they were paid. And so basically they're paying taxes on that amount twice. Whereas if you had them on payroll as an employee, you would be paying those basically the other side of the self-employment tax. So they're only really getting taken out like 7% of their taxes to go to Social Security and Medicare. And then your company is matching them. So they're paying 7% and you're paying 7.5% instead of them paying that whole 15% themselves. So oftentimes if you already have been paying somebody as a contractor, you can have this conversation with them and say, hey, look, you really should be an employee and I want to bring you on because I want to invest in you, right? Because when you employ somebody, they have a little bit more job security than when they don't. Plus, if they were to get laid off, and let's face it, it's COVID, right? So we've had to go through all these different kinds of scenarios that we would have never expected, right? So there was a lot of people that had to get laid off. But if they were in this position, they weren't able to collect unemployment because they weren't getting paid as an employee. They were getting paid as a contractor. So that in and of itself is a benefit. It's like, hey, I can put you on payroll. And then if you have to get laid off or furloughed, you can still collect unemployment as an employee, not as a contractor, but as an employee. That's what can happen. And so that's an additional benefit as well. So if you were paying your contractor or your employee who's actually a contractor $15 an hour, you can have this conversation and say, hey, look, by coming on as an employee, you will pay less in taxes. You will be able to collect unemployment. You may even want to start some benefit packages for those people. So maybe give them some paid time off or, start an IRA where they can start saving for their retirement or, maybe provide pet insurance is like another big employee benefit that I've been hearing more about. And but those kind of things that aren't going to cost you as a business owner a lot, but it's something that can benefit the employee. Same thing discounts, employee discounts, or if you're a food-based business or something, like they can get a free food product every other week or once a month or whatever it might be. Like those are little things that you can provide your employees that make them feel valuable. And that's really what it comes down to is how can you show your appreciation and value for your employees and what does that look like? But that can be all booked up into an employee benefit package, right? Excuse me. You can have this conversation with hey, look, I was paying you $15 an hour as a contractor, but because I'm going to be providing this benefit and saving you money in taxes and you can get, pay time off now, I want to pay you $14 an hour or $13 an hour as an employee. So you can even maybe put in there that you're going to pay them a little bit less, but make them employees at least to start. And then they have the opportunity for raises at some point as well because they're employee and not a contractor. So there's a lot of different benefits that you can get by having an actual employee versus a contractor, not to mention if you are incorrectly classifying your business contractors as contractors and they actually are supposed to be employees because of those parameters that I told you about before, and the state were to come in and audit you and look at how you classify and what your employee looks like and all that kind of thing, you can get fined and have to pay all those back taxes. So it's really important that if you do decide that you want to keep your contractors as contractors, that you make sure that you are following those guidelines to your state and that they actually should be contractors and not that they should actually be employees. So make sure you are looking into that because it's really, really important. And the last thing you want to do is get in trouble with the state because they're very aggressive, not to mention you won't pay those fines. Who wants to pay fines? Like, that is what we're looking to avoid by being part of this group, is what are those flags and what are those things that you as a business owner need to be aware of so that you can save more money and you can be more profitable and more successful as a company. So that is what I wanted to talk to you about today, employees versus contractors, getting your team together. One other thing to consider that I would highly recommend, and I had heard this as a suggestion from somebody, I don't even know who it was, a while ago, but basically what they were saying is when you have, the intention of hiring somebody, start putting away that amount of money that you would pay that person like a few weeks or months or 2 months or 3 months in advance. So if we're at the end of the year, so say right now I'm like, I'm looking for a tax preparer, not actually, but I mean, like, I would if we're in the right position at the point. But let's just say that I'm going to hire a tax preparer, but I want them to start in January. So even right now, whatever I'm planning on paying that person, I'm going to start putting in a separate savings account. So if I'm going to pay them, $300, $400 a week or whatever, to be our in-house tax preparer or whatever it might be, I'm going to start putting that $300, $400, $500, whatever amount of salary or pay into a separate bank account, because then I can see in real life how that's going to impact my business, right? I can prepare for that. And let's say we don't get as many tax clients, or they push the tax deadlines back again. So then instead of in January, they're going to be starting later or whatever it might be, right? Something happens during that 3-month period, I can see how it's going to impact my business without actually having to pay that amount of money, right? Because it's going to actually be in savings. So I'm going to still have it, but I can see that impact, right? Because so often, small businesses, we are working off of that number in our mind, right? The number in our brain, we're working off of our bank account. It's not a good place to be, but in all honesty, it's kind of what happens, right? So we want to see how this major change by like hiring somebody, because that's going to be one of the most significant costs that you have, what that looks like for your business. So do that if you're planning on hiring somebody first. Plan for it and then see how that plan impacts your business before it actually impacts your business. And this is what we're going to call smart business planning, because that is important to being profitable and successful as well. Okay, so 2 things that you need to walk away with today. 1, figure out if your employees are actually employees or if they're contractors, and determine which they should be. 2, if you are planning on hiring an employee and you haven't yet, start putting that money away. And you can really do this with anything too. Let me just put this in as another side note. If you're planning on hiring a marketing team or an accountant or some other kind of contractor that you're going to be working with, and have a way, get a quote from them, start putting that money away, see how it's going to impact your business, because making thoughtful, impactful risks, thoughtful risks, calculated risk is what I usually like to say. Calculated risk in your business is what's going to help you grow it, but you want to make sure that it doesn't railroad it. So be thoughtful about your business and what you're going to do, plan for it, and you will be profitable. Because, right, this is my saying at the end of these videos now, we are creating strong and profitable businesses that are going to provide for our families, our communities, and our futures. So thanks for joining me, your accounting sidekick, and I will talk to you again soon. Thanks. Thanks. Bye.